welcome to the Capital Discussions Market Analysis. I'm Tom Nunemaker with Jerry First today. Before we get started, a quick disclaimer, the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And that's about as fast as I can read that without speeding up the audio like I did the other time. So,
Alvin, the disclaimer trader, yeah.
Yeah. Okay, so now that we are recording, we can talk about the market and everybody will hear it. So, like I was saying, an interesting market action today. Started up. I think SPX was up, 4 or 5 points, and then did a 180 and headed downhill for most of the day.
Right. So let's go ahead and take a look at the SPX real quick. Okay, so here we take a look at a 5-minute chart going out to the open around 9 o'clock. We opened up over here, so it was, we opened up higher than Friday, so, and then proceeded to plow our way down. Had real momentum into the European close at 11:30 Eastern time, and continued down, and then a little minor rally in the last 15, 20 minutes. So you want to talk about the type of trades you put on and why?
Well, I was talking to Bill Gary the other day, and the volatility was right, and his technical stuff was kind of lining up. So we both sold some puts in the SPX in June, 21.75s, and I held on to them. He rolled them up already, but so we were both short those puts or calls, sorry, and a couple of call credit spreads. But then I had an order in to buy mine back for about 30 cents below what I entered for, so I made a little bit of money on them. And I'm still short 3 SPX calls, so I'm profitable with them right now, but just looking for a little bit of market pullback. I think it's kind of near a top, and I'm looking for it to probably go sideways or down. I didn't see a lot of, it broke through the previous high, but it snapped back down, so it's not very convincing to me that it wants to keep going higher.
Right. I'm looking at my other screen. I put up a chart of the VIX, and I don't see, what do you see on your screen?
I see VIX.
You do see VIX, okay. Because on my other system, does anybody else out there, tell us what you see out there, what's on your screen at this point? Because my VIX, okay, very good. Because my other system, it looks like it's frozen on this PowerPoint. Okay. So yeah, as far as the VIX hardly is budged as far as on the daily chart. On the 3-minute chart, it rose towards it's a good indicator as far as getting short. It is something to confirm, especially if you're in the SPX. And as far as the actual chart goes, if how long did you put on your position for? It was just a short-term position?
Yeah, it was, let's see, let me look at my T-log. I put it on the 24th, so that would have been, Friday, right?
Yeah, so that's practically a day trade. All right, cool. Well, very good. Let me go ahead and bring up this PowerPoint. As far as what we're doing, for the most part, is the week ahead every Monday. And so here's a calendar screenshot from Bank of America. As far as Case-Shiller, that was out today, consumer confidence. GDP is going to be supposedly the big driver leading into the FOMC announcement on Wednesday. However, there's no real decision expected from the FOMC. What used to be a big market-moving surprise is now somewhat predictable. However, that's when complacency can go ahead and bite you in the butt. So when everybody starts to say that, well, nothing's going to happen, you never know when all of a sudden that's when the Fed decides to tell everybody they are at least wanting to make believe they're in control. And so then we got the jobless claims on Thursday, personal income, personal spending. I expect between the GDP, they're expecting a lower, less than 1% now, GDP annualized. My expectation is that the lower gas prices that we saw in the States earlier in the year, which are now evaporating, are going to show up and kind of, I think you're going to see personal income and spending had started to pick up. But I'm not sure about, Tom, where you're at over there in Germany, but the price of gasoline, they were saying it went up another 14 cents in the last 2 weeks. And so we'll see.
Calculation, because I pay, my gas is in euros per liter, so give me a second, I'll convert it to dollars.
Okay. Yeah, I mean, have you seen, though, the fluctuations with the price of oil?
I mean, we've seen the prices come down, but you have to realize that over half the price of gas is tax. We have like 75 euros in a sense per liter in tax. Mm-hmm. So it's it went from maybe like 155 to 160 down to 140, to give you an idea. Right.
And then when it comes to the euro, it's and well, then you got liters versus gallons, so that's about double. So, yeah, it's pretty much correlated. So, okay, so then leading into Friday, construction spending, ISM manufacturing, sentiment, that's the scheduled events, okay? The next thing I wanted to show, oh, and by the way, for those of you who don't know who I am, this is a screenshot from the Traders Expo going all the way back to 2006. I've been doing traders educations for over 10 years. This was me on the 7th floor of the Marriott Marquis in New York City on Broadway. And Larry McMillan had presented before me, followed by Tom Sosnoff. And then I went ahead and cleaned up at the end of the day there, way back when. So I did a presentation. I'm sorry, go ahead.
$8 a gallon is what we're paying here.
You cut out. Say it again.
Oh, I did the number. That's $5.78 a gallon is what I'm paying for gas right now in Germany.
Okay, and when it goes down 40 centavos, that correlation, well, that's still pretty big, $5. Yeah, it's all taxes. You guys get taxed up front, right? You have more of a consumption tax than an income tax.
Added tax is 19%.
Yeah.
So if you go to apple.de versus apple.com, you're paying a 19% markup just from the tax.
Right. So yeah, and it is a tax. The price of gasoline is a tax on people. It's just amazing how long it took, and you could even see the people on the financial news trying to go ahead and say, is this a good thing or a bad thing that the price of gasoline is coming down? It's like you got to feel sorry for Exxon and Halliburton. So anyway, let's take a look. This is a chart of the SPX that I did before the presentation, just to go ahead and show you that we're breaking above resistance over the last few days. We had this W pattern pretty well formed, which is inside of a well-defined trend channel. So obviously the trend is up. We do have a lower support level down here. So if price was to fall out of this wedge pattern, triangle pattern, whatever you might want to call it, the next support level down would be back down here at about 2,000 or so. I can go ahead and cut back over to the live chart. And let's take a look at the SPX. That's on my weekly grid. And you can see that very well-defined trend channel where we have several times the hammers have pegged out and hammered the support line of the trend channel. And then we also have this one hammer right here that also, when you just connect that hammer, the bottom tail, or shadow, or wick, whatever you want to call it, to these, it's extremely symmetrical within the same slant. And so you can see that if we're going to go and head up, we have upper resistance up here at about 2200, call it 2205. And this is on a weekly chart. And over here on the support area, we've got it down here, as I said, about 2000. So now if you're going to trade on an intraday basis, obviously this is a little bit more aggressive, or I should say not aggressive, it's more long-term. So here, when you take a look here on the daily chart, you can see your higher resistance and support levels, 2138 on the upper, and you've got 2093 as support. But here, again, showing you this W pattern, we've now pierced not only the resistance level of this connecting the triple tops, but now we're continuing to move to the upside. So if you had to make me put on a trade right this second, I'd have to go long in the market. And that leads me to my next slide where, as Tom has already said, anything that I say is strictly an observation on my part. Everything can change in a matter of minutes. And so nothing should be considered as financial or trading advice. And so here, let's take a look. We started talking about oil and gas a little bit. Notice also somewhat of a W pattern that we have we've got congestion right inside this level. Let's bring up the live chart on that. How many people are trading within the futures and commodities and with options?
I think it's a small percentage. I think most people in our community are doing it off the indexes like SPX and RUT.
Right. Okay. And so over here on the oil charts, okay, so here you can see as you tighten up the charts, you can see that W pattern that I had called out last week that we had started to pierce. It's kind of continued. You can see where prices kind of stopped up and down right about here. And now the question is, will it continue to run up? A lot of people are saying that we have not seen the bottom yet, and so we've got the bottom back down here at about 33 or so. But for the interim right now, trending higher. As far as the other charts that I took some screenshots on, let's go ahead and work through that. Here's the 3x3 grid. Okay, so I'm watching all of the major components of the global markets with the top row with currencies, the euro, the pound, and the yen versus the dollar. We've got an interesting flag pattern on the dollar-yen. Middle column, dollar index, oil and gold. I talked about oil so far. Bottom, we've got the U.S. indexes, the S&P 30, the Dow, and the NASDAQ. If I wanted to, I could bring in the other exchanges. Shanghai has been incredible. Anybody have any comments about the Asian markets? It's quite interesting. Here's a zoom in on the correlations going on in the charts. You can see very easily that, notice the support and resistance level here on the U.S. dollar, right where we were at about the 4 o'clock Eastern time. Notice resistance was hit several times here. The dollar index went up, made a high, came down back to the now support level, went back up and came back down. And notice that you have almost the opposite pattern over here on the euro. And underneath we've got the S&P 500, which is almost an exact inverse correlation of the dollar index, which some people would say, well, it makes sense. If money's going to come out of cash, it's going to go into something else. So some of it's going to end up going into the equity markets or the bond markets. Any questions on that? Out there, we always like a little bit of audience participation out there.
Well, no questions, but Himanshu has joined us as a panelist, so maybe Himanshu can add to it.
Well,
so far, Jerry's doing pretty good.
All right, very good. Welcome, Himanshu. Okay. And a quick look at gold, which also here, this is a daily chart. I'm sorry, weekly chart. I've got that mislabeled. Hold on a second. And so we've still basically based and gone sideways. There are some people saying that the flows of physical gold to the Asian markets are huge, and the Indian market, and that somehow the physical price is being held down. Some people would argue that it's time to go out and buy while it's cheap, but that's anybody's guess. And again, here, take a look here on the NASDAQ. Again, the very similar pattern, same as the S&P, only notice that with the NASDAQ, we had this triple top, and then it reoccurred here. You can see that we're starting to head towards the top of that trend channel. And for those of you who hadn't heard, we've now gone ahead and made all-time high in the NASDAQ, breaking the old tech bubble highs of 2000. And that brings us into the earnings season. Apple has just come out with their earnings. In fact, let's take a peek. Anybody trading Apple out there? Let's take a look.
Chuck is.
All right. And, you know, the amazing thing is the aftermarket versus the options open market. Let me bring up, here we go. So what do we get? The market maker move was about, I think, 6 points over from Thinkorswim. So we closed right at about 132.50, and we went up to 136. So we've got in the post market, what do we got? 3.5 points, and it's retracing. Now, this is interesting. We had something like this last week, and look at the spike. Look at all the stops that just got hammered out right here down at 129. That's amazing. Look at all the volume at the very last second right here. This is huge. Something else that's happened since our last presentation on Monday is that the SEC, I guess, found the lone trader in his underwear that crashed the market with the flash crash. It just so happens that he's clearing through MF Global, and but John Corzine's nowhere to be found. Oh, no, well, no, he's opening up a new hedge fund, isn't he? So let's go back here. Take a look at this. This is something that that I found kind of interesting last 2 weeks. Chipotle Mexican Grill, slide 11. This stock had an unexpected, on no news, 40-point gap up about a week before earnings. You can see right here. You can see it here on the daily chart. The gap up is right here. You can see the gap up here on the 30-minute chart. and then it gravitated up, which to me tells me it was buy the rumor, sell the news. And even though Chipotle came out with great earnings, they went ahead and brought it back down 50 points, whoever they are. And so I'm wondering if there may be something similar happening with Apple, because we've had a beautiful run up with Apple going into the earnings. Here's our regular daily charts. And you can see for the past, we've gone from about 122 to 132. Yeah, considering the market cap, that's a pretty big move. And technically, very well formed triangle pattern here, which was breaking to the upside. Now, so the question becomes, okay, earnings are out. I didn't even catch the fundamentals. What are the fundamentals? As far as did they beat? How did they come out? I guess I could pull it up real quick. Let's see here. If anybody knows, you could type it in. Let's go to the news.
Bloomberg says Apple posts massive quarter, so I guess they must have beat.
Yeah,
Okay.
33% rise in earnings.
And that's, yeah, there we go, right here. So, and that's the main thing, right? We're really looking ultimately for earnings, but also it's got to be revenue, because they're going to add the dividends and buyback also. You know, personally, buybacks are a cheap way of putting money to. Whoa, there's that echo. I never liked the concept of buybacks, even back in the day when I worked at IBM, taking good money and dumping it back into the stock. I always felt it should be put into either growing the company or give it back to the shareholder directly. But that's just my opinion, right? So, so they're going to lift their dividend. That's always usually, you know, good for these. Let's see, revenue gain 27%. Okay, so now we're talking 58 billion compared to 46. However, analysts expecting a profit of 216. Okay, so they've got a problem with profit. All right, so I mean, for the most part, I'm a technical investor and trader. However, you got to look at these numbers and hope that that they're accurate. Unlike other entities that, you know, are supposed to report their taxes and earnings properly. Jim's not here, is he? So
No.
that means I've got free reign. So, he was trying to curtail me the other day. So so one more look here. I want to jump back to Chipotle for a second. I did a presentation last week, and it's interesting. You know, you end up in a room full of people with various degrees of experience. Some of them never heard of the Fibonacci's, and I was just amazed how the Fibonacci's, going back 4 years, we're calling the recent highs, and how it happens every time. And take a look even here on the daily chart, where the Fibonacci levels not only projected the gap right up to the even number of 700, which is a resistance level all in itself, but then once the earnings came out, what did it do? Price went ahead and came down. It spiked through this prior support level, but you can see the Fibonacci level support right here, the congestion level here, and at the end of the day, that's where price settled in at. Well, actually, it came back up over here, but you can see the when price opened at 9:30, it opened right on that Fibonacci level and was sandwiched in between this one right here. So, So that's a call out to Fibonacci, whoever he is. It was interesting. I was doing another presentation at International Traders Expo once, and I was talking about Fibonacci's, and a gentleman in the crowd put up his hand and he said, Fibonacci was a thief. He didn't even put up his hand. He just blurted it out. And I said, excuse me? He goes, yeah, Fibonacci was a thief. And I said, well, okay, that's interesting. Explain. So he goes, he stole it from, was it Socrates? Not Socrates. One of the other Greek philosophers. It was, whether it was Socrates or Plato or somebody. And it's interesting how basically, you know, fundamental truths. And I made a comment that I'm sure that it came out of the library in Alexandria and all of these other engineering marvels that just, you know, these are just accepted practices once you get down to the vibrations and the cycles and the formations in the universe. So that's my little diversion for a second. So let's talk about earnings for this week. Within my screening software, I've gone ahead and I've got 301 companies that are optionable that are at least showing up in my initial screen, and Apple starts out the bunch. And so for those of you who are, you know, we've got long-term investing and short-term trading, and then you've got earnings plays. So I know that a lot of you here at Capital Discussions are heavily involved with options, and some of my best trades have been with earnings announcements, whether I'm looking for the volatility crush afterwards or the lead up into volatility just before the announcement and everything in between. So that's about it as far as my screenshots that I wanted to make sure that I had. And Himanshu's here, and I think last week or the week before we took a quick look at IBM as they came out with earnings. And Himanshu, what are you looking at these days? Or would you want to go ahead and share your screens? Or does anybody, before I go ahead and do that, any comments? I see Chuck. How you doing, Chuck? If they can sell that little watch, what can't they sell? You know, it's very interesting. Now that everybody's got a cell phone, number one, do you really need a watch? Now, you know, if you're going to travel and you don't want to carry a whole bunch of gold in your pocket, a nice Rolex with a whole bunch of diamonds with gold is not a bad idea, and an Apple Watch made out of gold for $10,000 is good. But my major issue with the watch, from what I understand, is that if you really use it, the battery life is 3 hours, that it's about half an inch thick, and it emits radiation that is currently under review by whoever the appliance radiation review people are, and it gets hot. So for a $300 watch, you have, you know, the Apple, what do you call it, the culture around Apple where people just want to buy whatever Apple makes. And so you've got a built-in audience right there. I don't know. I think that, you know, what would be really cool is if they had an app on the watch that you could project up on a wall, so that then you could project your watch and make it like 6 feet of 6-foot screen, and that I could go ahead and like also draw on it with my fingers, so I could draw Fibonacci's on my watch, and I can just but if anybody's writing apps.
That's Watch 2.0.
There you go. Yeah. Or actually that would be 38.2. Or so or 23.
Yeah.
Yeah.
Do you want to have Himanshu? Do you have anything you can show us with your analysis?
Sure.
Okay. Just change the presenter. Okay, I see a desktop,
Okay, that's good to know.
including Woody CCI, our friend.
Yes. Stick to few simple things and things will be okay in the long run.
Right.
Yeah, we were looking at IBM last time. They had earnings as usual. This time it went up a little bit, came back down at least halfway the very next day, as it always does. But it did manage to break out of previous resistance. I was hoping it would stop at the 200, but it went through. Hopefully it'll come back down. We don't know yet, but we have a gap here that needs to be filled. So IBM could go up to about 178 before deciding to reverse. Other than that, what you mentioned about the SPX, yeah, like you, right now, it may come down a little bit, but I think we are probably going to go way up in the next 6, 7, 8 months is my general interpretation of the charts as of right now. Now, I don't normally trade Apple too much except my triple calendars, but here also we have Apple about to beat its previous high. The ADX is rising, which tells us that the trend is up in this particular case. But CCI is telling us that because we are above the 200, plus 200, if it hooks down, that could be at least temporarily the end of this run up, and we could see some down moves before starting up again. So in the long run, as like Jerry, I am bullish, but there could be a chance of a short retracement before that happens. Make sense? What do you think, Jerry?
Yeah, yeah, and looking at your chart, it looks like it's easy to see a double top over there.
Yep.
You know, overall, I mean, Apple is like the quintessential, if that's the right word. I mean, it's an institutional stock. Once they did the split, it allowed a lot of retail investors to get in, and so you see a lot of participation. It's really a proxy on the market. What's
Yep.
interesting is if you go ahead, Himanshu, since you got the screen, how easy can you bring up volume and change that to, let's say, a weekly chart?
The
Oh, you
volume
got
is
it right there.
here. Yeah.
I'm
I can change
sorry.
this to weekly.
And bring in like about, like from 2007 if possible. Are you able, or you might have to bring in, or if you want, go out to, there you go. What's interesting is look at the volume,
Wow.
right?
Yeah.
In other words, who are we trading with when you're involved with Apple? The fact that, you know, where is everybody? And this really begs the question that, you know, there is, allow me, is Jim here?
No, he had to go do something with his dad, so he couldn't make it today.
All right. So if I was able to, and if I was planning properly, you guys might want to Google this. There's a Beavis and Butthead episode called Candy Store. And it's an amazing 15-minute skit. For those of you who don't know who Beavis and Butthead is, we'll just, you know, Google it. And so they had a school exercise to go out and sell candy door to door, as, you know, a candy drive. And so they finally got one person to buy a candy bar for $1. And with that $1, they kept on buying the candy back and forth from each other. It's like, hey, Beavis, I got $1. Give me a candy bar. It's like, okay. And so that $1 kept on going back and forth until they, you know, finished up, you know, buying each other's candy. So think about it. is that what's happening with the market at this point? Do you have the same people on very low volume just bidding up the price, but there's really nobody there?
True.
When I look at a chart like this with the volume, it's really self-evident that we're not in Kansas anymore.
Yes.
Yeah.
But, and therefore, there could be a retracement before the big guys, these guys, start jumping in again.
And even more scary is that what happens when you have a true market crash is that everybody steps away, and now there's nobody. It's just the computers. If there's no bid, the price just drops until it hits a floor somewhere.
Mm-hmm.
So, that's just a little heads-up insight. So, yeah, thanks for showing us the volume there, Himanshu. Something I wanted to point out earlier. Is that volume adjusted for the 7-to-1 split? It should be.
I think so, yes. I think the split was somewhere in 14, right?
Yeah, it was, or actually the end of 2013. It was about 2013. Yeah.
That's when they announced it, I believe.
Mm-hmm.
I think after the split, it was at around 89 something.
Yeah. And splits by themselves can be indicative of a market top where the institutions are looking to go ahead and offload their shares to people who, can go ahead and afford to buy it. So
that's true. Yeah, I remember in the year 2000 there were more splits than earnings announcements.
leading up to it, all through the late 90s, right up through 2000, there was just splits on top of splits, which is actually part of the reason why companies like Cisco and Microsoft, there's just so much liquidity. I'm a full. If I wanted to be an activist investor, I would be after these guys to do reverse stock splits. Let's do a 1 for 10. That would dry up a lot of the liquidity, and then you might see a little bit more room for these things to move.
Okay.
Yeah. The split's shown on your TOS by the little pink icon down. Okay. So yeah. So anyway, the volume. Well, it's a good question, but obviously the stock split took place after the volume tapered off. So I would say that volume is indicative. You can actually even just pull up, if you want, Himanshu, since you got the chart, just even type in the spider SPY.
Okay. Yeah.
And take a look at the volume on the SPY. And you can see how, even the volume.
Monday so far. It's first day of the week, but even otherwise, yeah, it's not.
Yeah, the overall trend, yeah.
We have another red bar high here. Plus, it's a bearish engulfing bar, so hopefully tomorrow it'll go down a little.
Right. I was just showing, how the volume going all the way back to 2007 is, indicative of
yep.
how the volume is drying up. Question from Steve. Good point on Apple's volume. What about the option volume, open interest? Interesting you say that. I took a screenshot, and I guess I didn't put it in my PowerPoint, of all the option volume today. Incredible. I think it was 1.2 million contracts. I guess to be expected. That would be interesting, actually, now that I think I understand what you're asking. Compare the option volume compared to the stock volume, because a lot of people are now moving more sophisticatedly into, if that's the right word, into options. Why take, personally, I feel if you know what you're doing with options, you've immediately put less money at risk.
Mm-hmm.
So if more people are becoming sophisticated option users, that could be showing up in the volume. It's possible. I'd love to be able to.
Combine the
Go ahead.
stock and option volume together.
I think I stepped on top of you there, Tom. I didn't hear it. Go ahead.
Oh, I think it would be an interesting chart to combine the stock and option volume together to see what the real trend is.
And to compare.
Yeah.
In other words, was the option volume going up as the stock volume was going down?
Okay.
Yeah, that would be interesting to take a look at. Right.
Yeah, but the option volume, given the number of strikes, we would have to just go ATM. That's it. Nothing else.
Yeah, it gets...
And because today was earnings, we would have to look at options that are going to expire this coming Friday.
Well, what I would be doing is looking at over the long term, going back to like 2005 maybe,
Okay.
so that way you see, the build up to the crash and then after the crash, and it would smooth out all the spikes. It'd be very interesting. I bet some of our friends at the CBOE would probably have some of that data pretty quick or be looking at it.
Yeah, I know
Interesting.
there. I can ask them.
Who?
The Chicago Board of Options Exchange. They've got actually Jim Bittman. I don't know if those of you are aware, Jim unfortunately had a stroke about 4 or 5 months ago. And before that, Steve Meisinger, just a few days before he was supposed to do a presentation for my group about 3 years ago, he also had a stroke. And so some of our really excellent presenters, people who are really passionate and know what they're talking about and have a great way of presenting, some of them are stepping off the stage. But
I didn't know that.
There, I can see if he has that data available.
Yeah, I think that'd be interesting. Yeah. Himanshu, what are some of the other things that you're looking at, or any new spreads that you've initiated within the last few days that you care to share with us? You can always put up the.
I actually initiated another IBM. There was something. Yeah, we also put on a new trade in the Russell, a long-term one, June-July calendar at 1270. So it is right there. Oh, this is a weekly, sorry. Yep. Sorry, 1260. Go ahead.
Do you use OptionNet Explorer or OptionView or?
I use OptionNet Explorer right now, yes.
Do you have it running already?
Probably.
I've got, if you wanted to, I've got a position that would be, I'd like your opinion on.
Okay.
All right. I'll share with the crowd here.
Okay.
There's this, and again, this is not a recommendation.
All right, let me give you the ball.
All right. Okay. Tell me when you can see my screen.
Not yet. It doesn't look like he shared it yet.
Oh, okay. Hold on. Share.
Okay, now it's loading.
All right. Now, in the interest of our disclaimer, which is saying that, once again, this is not a recommendation to trade, just something for you guys to think about. There's a stock out there that one of my clients brought to my attention, and iRobot. It's an interesting chart pattern here, where on the daily chart,
wow, it almost looks like IBM.
We've got on the daily chart a triangle pattern, and we do not have a buy yet. I'm waiting to see it break this upper trend line here. And on the weekly chart, we have what looks like, it's not exactly a head and shoulder pattern because you've kind of got a double shoulder here. It's what I would call a complex head and shoulder pattern. And so the way I look at this is that price could potentially be breaking to the upside or breaking to the downside. But whenever I see well-formed patterns on multiple time frames, it's something of interest, and it's one of the things that I teach and work with a lot. And so what I'm looking at is the current price, just looking at the current price here, is that we've got resistance up at about 38 and support down at about 30. We're trading at 34, so we got a 4-point plus or minus. And it's an interesting sector as far as robotic technology. So I'm going to go ahead and just show you real quick. Using Option View, I had gone ahead and I had looked at several different trades. And this trade looks interesting here. Using the January 2017 leaps, if you buy the 37 calls and sell the 40s, okay, the spreads are extremely wide, okay, but Option View says that the current midpoint was going to cost you about 55 cents. And so the concept is that, well, if stock goes down, so then you buy back the 40, and then you've got about 2 years to wait for the stock to go back up in case it gets completely slaughtered. Or if it goes up, you're doing extremely well. One of the first things that I look at when it comes to risk-reward graphs is that, you know, you've got your 0 point right here. And so I've got this much risk to make that much reward. And so whenever I see a risk-reward graph that looks like that, it's like, you know what, I can take a flyer on that. Yeah. And, you know, we're not really looking at a whole bunch of money either for anybody who's just even getting started. It's a small excursion of $580 that says that if by June 8th we were to go ahead and hit, I just went ahead and covered it up, 37, we'd have approximately a $590 profit, which is a cool 101% gain. So, you know, that's some of the analysis that I do and work with, and I just, yeah, thought I'd share that.
Are earnings coming out anytime soon?
Along those same lines, I actually put a new tool on the website this weekend. I'll put the link in the chat. But it basically is something to help figure out what your mathematical expectancy is for a trading system. You know, you have to put in things like the margin on the trade, the win percent, your profit target, your max loss, and then your total account portfolio, and then the fractional risk, like 1 or 2%. And then it'll tell you what all the numbers are. So I actually put this in, and this trade has a positive mathematical expectancy. So, you know, that good risk-reward ratio with a decent win percentage, it works.
How about if and that's using the current spreads or just using the numbers I've got here?
Yeah, I just estimated what you had in there, so it because I couldn't see what your actual profit is on the. Let's see what it's a possible gain. What's the max up there? You're kind of hiding it.
Yeah, the.
Or something.
Yeah, if you tried to get that, the trade today, it's the spread widened it out, so it was actually closer to a $1. So it comes out, it's not quite as good, but you know, you never know. You just leave the order out there, good till cancel at maybe 80 cents, 70 cents, and see what happens. Or if you still like it, even at $1, the risk reward comes out to still be quite decent. I don't know. In fact, Tom, can you want to go ahead and take the screen and show us the new tool you got there?
Yeah, sure, I can do that. Let's see. I actually got the idea from Chris Smith at the Option Club because he had this tool in a spreadsheet form, and I thought, oh, well, I can just make that as an online tool and I don't have to load Excel. So can you see my screen?
Yeah.
Yep.
Okay, so it's on Tools, Trade Evaluator, and these are the numbers that you put in. It'll save it as cookies, so if you have like a certain account size like that you want to just keep remembering, it'll actually set a cookie and remember that when you come back the next time, so you don't have to keep re-entering your portfolio size and how much risk you're going to take per trade. But these are the four numbers you need, and it'll calculate your expectancy, the return you're expecting to make on each trade, how much risk you're taking, the expected return on the risk, and the return on the investment. So that's divided by the margin and also by the risk that you're taking. And this comes from, like this is 2% of 50,000. So if you're going to $50,000 account, and you're saying I'm only going to risk 2%, then you're only willing to risk $1,000 on any one trade. And this trade, you're risking, say, 1155, which is 1.6% of your total account. So you're under your 2%. So it's just a way to help, take a look at a trading system and see, is this something that's mathematically going to work or not?
Very nice.
Right, right. Interesting. One of the calculators that I use, or just its rule of thumb, is how much am I going to allocate to my trade? And what I tell people is the 10 and 2 rule. So 10%, which would be I'd allocate 5,000 with a maximum risk of 2%.
Right.
So so of course 10% is easy to just calculate in your head, but that's something that to go along with that. Yeah, very good. So tell me, so you plug it in the trade margin, the win percentage, you're plugging that in as
yeah, so like if you look on option view, the probability of profit, you could use that.
Gotcha.
And that's the simple number to use. And then, what's your average profit and your average loss? And then you just punch them in and it'll calculate your expectancy and all these numbers. So it's, yeah, you don't have to go load a spreadsheet up. It's all right here available for you anytime. So.
Nice.
Cool. Yeah.
So there's just that little tool.
I think all you then need is the Monte Carlo simulation that Dan Harvey showed us once.
Mm-hmm.
I keep on losing that URL. So if it was here, I would not have to lose it ever again.
Yeah, well, I'll see if I can find it, or if not, I'll ask Dan for it, and then I can just add that into our tools list. So then we won't have to wonder, where is that URL again?
Right.
Okay.
Great.
All right. I'm looking at my two screens. It's really strange. Both of them say thanks for using WebEx. We didn't end the. I mean, I can see your screen, so you didn't end the webinar, did you?
No, I just stopped sharing my screen.
Okay.
But speaking of that, it is about an hour, so it's probably, there's no more questions, so I think it's probably a good time to wrap it up for this week. So,
all right,
Jerry, we really appreciate you coming on and showing all your charts and insights, and hopefully everybody got a few ideas from it.
There you go. And Himanshu, thank you.
Thank you, Jerry. Thank you, Mohit. Mohit is thanking all three of us.
So thanks a lot, everyone.
All right, thank you.
Okay.
Thanks, guys.
All right.
Good trading. Bye-bye.